back to you.
Got that, Abhishek. Yes, and that's an interesting point that you made, that perhaps the reason why provisions are higher is because they've just written off the bad stuff. We'll wait for the details on that one, the write-offs, the recoveries, all of that should come through. But right now the stock's reacting really well, 4.5% higher. One stock that is not reacting well at all is Divi's. It's a crash landing there, so to speak, 10 to 11% down and no sign of recovery. Massive miss right from the top line down. Let's go across to Ekta to understand what's happened here. Ekta, you were anyway expecting a weak performance, but I think this is quite a howler.
Well, yes, there's no two ways of calling it anything else. It is a howler for Divi's Labs. It is a complete top-down miss, and it's a big operating miss. So it's not that much of a miss in terms of revenue. Revenue is down 31.5% year-on-year. The street was anticipating around a 29% decline this time. But the big disappointment is the EBITDA, which is down 63% on a year-on-year basis. And the street was anticipating around 591 odd crores. It's come in at 408 odd crores. Margins have come in at probably historical or multi-quarter lows for sure, at around 23.9%. Remember that the peak margins for the company have been around 44% just in the past couple of quarters itself. Now, profit decelerated because of the operating margin performance, so it's down 66%. The street was anticipating around a 47% decline. So despite weak expectations, it's coming even weaker than what the street had anticipated. Q on Q as well, margins have come in at 23.9 versus 33.5%. Now, 9 months, revenue is down 10%, margins 32.3%, profit down 27%. What this is telling you is that the COVID-19 opportunity has dwindled completely for the company, but is the base business impacted on a structural basis? That's what we probably need to find out. In terms of the valuations, the stock is down around 36.5% from its 52-week high. It's trading at around 35 times versus a one-year peak of around 55 times on an FY23 PE. So you can see the kind of destruction that you've seen in the valuations as well. They do have a conference call at 2 p.m. this afternoon. More details, and I'm sure this conference call is going to be very widely tracked this time.
Okay, all right. Thanks a lot for that. Ekta, stock down to around 30 times multiple. Remember, at its peak, it was close to around 4,600, so stock has lost 38%. From its peak. But let's try to understand those numbers better. We have Vishal Manchanda as well as Deepan Mehta who join in. Hi Vishal and Deepan, good afternoon gentlemen. Vishal, you go first. What are you making of these numbers? And everything's good at a price, right? How much of the bad news is factored in? These numbers are disappointing, but at some point of time, will there be some value that will emerge? And also, what are the key points you're looking forward to in this con call at 2 p.m.?
Right. As Ekta pointed, we were expecting a weak performance this quarter. So on revenue, it's broadly kind of not that disappointing. So it's 11% below consensus. But what this quarter essentially reflects is the base number. So this quarter does not include any support from the COVID product that they were supplying to their partner in the US. So that is essentially out, and now what we are seeing is the base performance of the business. So this is much weaker than they traditionally used to do in their base business. So this also reflects the quantum of pressure that Divi's is facing on account of inflation and freight costs. So this is actually below the base performance they used to do prior to COVID getting into their numbers, COVID products getting into their numbers.
But Vishal, can the company recover from the kind of weakness that they are seeing in the base business? Could this be the bottom for the base business, or does it get worse from here on? What are the trends?
It seems so. This would be probably the lowest quarter, and then we'll see an improvement every quarter from here on.
And by how much would you need to pare down your EPS estimates? Ekta tells us the Go ahead.
Yeah, probably I think another 10 to 15% correction is expected in the EPS.
Okay, so Vishal, going forward, would you look at, Divi's, or basically in your pecking order, where will you place it, given the fact that it does have valuation comfort?
So we have a sell on the stock. So it's corrected. It's closer to our target price now. So we were close to around 2,700 in target price. So it's closer to that point. Now we'll have to probably the commentary is important in terms of so they have a few things that are lined up for the future. They have they are going to supply key starting material for certain products, and they have these iodine based products also lined up for supplies in the future. So basically how these products translate into revenues would people would wait and see, and then probably numbers would start shaping around those around how things happen around these new opportunities that Divi's has.
All right, Vishal, we'll leave it there. Thank you very much. Good conversation and a quick view on Divi's, which is taking a very, very sharp cut. Dipan Mehta is with us. Dipan,